Jennifer, when you look at China, is it where the main risks are coming from?
Yeah, possibly. We've clearly got signs of a slowdown in China, more so than elsewhere. But I think perhaps bigger risks going forward are, related to what happens in the US in the rest of the year, whether we see growth coming off there, and what happens with the whole threat of protectionism. Obviously, that's something that's really key at the moment for all of the economies.
So how do you view the trade war, right? How much does it escalate? Do you assume that the global economy won't be hurt too much? Because if it escalates, then they'll bring it down a notch.
Yes, that is our current running assumption, but it has become clearer and clearer that we can't be complacent about this. This has escalated and escalated. Clearly, the EU is very much involved in the trade war and is retaliating to President Trump's threats. So it's a growing risk. I think at the moment the tariffs that we've seen are affecting a relatively small share of goods, of course, and even if cars were to be included, that's not absolutely massive in terms of the EU's overall exports. But if we start to include car parts, there could be a huge disruption to multinationals' production processes, and we could start to see much bigger effects on the global economy. So,
is it Germany that will be hit the most when you look at the European countries?
Yes, yeah. Germany and Slovakia are really, the exports of cars are pretty key for them. Even there, the direct impact of a tariff on car exports for the German economy, for German GDP, is unlikely to be massive, perhaps something like 0.5% if President Trump went ahead with the 20% car tariffs that he's threatened. But as I said, there are spillovers into the rest of the economy, so it could start to be much more damaging. Of course, for the US economy as well, BMW does a lot, for example, does a lot of its production in the US, so we could start to see layoffs there, and it's a lose-lose situation.